Today we discuss the eagerly awaited 2019 asset allocation piece prepared by the Escala investment team. I'm joined by Giselle Roux today. Happy New Year, Giselle.
Stuart, already well into it.
Absolutely. Volatility's returned to our markets. Can you provide a snapshot on your current thinking, please?
We actually call it more uncertainty than volatility. So if you like, for those that look at our daily, the measured volatility, which is the VIX number you might see there, has actually been quite benign. But there is no disputing that there is an air of uncertainty about where things are heading, and investment markets are reflecting that. We seem to also have had a degree of sort of speculative behaviour in the markets that did influence the way the markets performed in December, albeit now we seem to be returning to sort of more normal behaviour with the quarterly results. But I think people should anticipate that this, and I'm going to call it uncertainty, that compared to where we were previously sitting, is going to continue for the foreseeable future. There is no emergence that is about to dissipate. So be prepared for more reactive markets, I would call them.
Okay. So with that in mind, can you tell us about any significant changes that you've made to asset allocation models?
So it may seem almost counterintuitive to that, but we have actually increased our equity weight. We did that earlier in the year, simply because we thought that valuations were looking attractive in global equity markets in particular. And in some ways, it's the old adage of investing when others are fearful that came to play there. We envisage that there will be a bottoming of the earnings cycle, possibly that the downgrades will prove too bearish and that the outcome could actually be slightly better than expected. So it's really trying to capture that part of the cycle that we see almost excess uncertainty, which is typically a good time to invest.
Okay. Any investment signposts that you're looking at through 2019 as the landscape's got a little bit more difficult?
Apart from the aforementioned uncertainty, and that really reflects mostly policy type issues around the world. I think most people will be familiar with them by now. The old one that we always watch is the behavior of credit markets. We just need to be mindful that there is a degree of tightening in credit markets. I mean, we know it here from the way the Bank Commission has already tightened up the provision of credit into the mortgage market, but it's also a global phenomena as the US has tightened its financial conditions. There is less credit available, it's slightly more expensive, and one needs to make sure that companies are not going to experience more difficult conditions to roll their debt, raise debt. So look at credit spreads, look at anything uncertain coming out of the credit market is always a good bellwether.
Okay. The question always arises from clients about what expected returns they might be able to achieve in this difficult environment. Can you give some guidance on how we should be guiding clients towards?
Yeah, this is always a difficult one, and you yourself pointed us to the numbers from the Future Fund, which were released recently and actually are in the press. They've had an exceptionally good 2018, but that's really because they're holding a whole group of unlisted assets that they don't revalue frequently. When you are involved in the more common markets that most people are invested in, the returns that are achieved in any period are really difficult to be specific about. But we're pretty comfortable with the idea of a 3-year rolling return phase, and therefore looking somewhere between the 5 to maybe 6% type of range for the majority of the portfolios, which will be below what was historically achieved of 7 to 8%. But I think realistic in terms of where we are in the cycle, moderation in both inflation and growth logically says that your returns are likely to be a little bit softer than what they've been in a decade where you had higher growth, falling interest rates. All of those kind of tailwinds are really behind us.
Thanks, Giselle. Thank you for tuning in. And please, as always, refer to your advisor about discussing your current asset allocation and the strategy for the year ahead.